This stinks. What stinks?
You know what? We saw a budding little bit yesterday. We had a very, whatever the CPI number was. Again, I don't even look at the number. The market tells you exactly what the number was.
I didn't look at it until afternoon yesterday, and I think the number was that the core CPI was 0.1% lower than expected.
Okay.
I think here are all the numbers, but this was the month-over-month core inflation as expected. The month-over-month headline inflation a little bit higher, but I think everybody was looking at. What, am I wrong here? Where the heck is the core inflation? I think the core the core inflation here year over year ticked lower, right. And this has been really the stickiest piece. It's been 3.3 the last several months. Right. And,
so we saw a bounce in euro.
You see this.
Aussie. We saw dollar Canada being sold, dollar yen being sold. Bonds rallied in the U.S. Stocks tore. SPOOs were up 100 points. And I thought, okay, we've bottomed a little bit. Now we're getting the market binary event to cooperate for a little bit more dollar selling. But boy, that didn't last long. And they gave in the euro, in sterling, they gave it almost all back. And now we're in slow death mode. So we're right near the lows of where we had rallied from yesterday. And we're starting at 6:30 in the morning to roll over a little bit, which doesn't speak well that we're going to find legs to the upside. If you're trying to find, we talked about cheap Kiwi, cheap Aussie, cheap sterling, cheap yen below 103, it's not acting really well.
Yeah,
and that's disappointing because the bonds are still up. They're softening a little bit today. Equity's coming off a little bit today, but they held on to 90% of their gains.
Yeah.
A good day would have been we held on to 80% of that spike and we traded higher overnight. We never, in terms of tape action, we never did that. So this speaks to me. There are still guys looking for, give me a rally and I will buy dollars.
It is interesting that we're getting such diversified price action off of that move, asset class wide, because you're right that like you see this. And even, I mean, they gave all this back by yesterday afternoon.
Right.
I mean, this is a 100 pip rally from below 122 to they just got up to 123 here. We're looking at sterling. And then they gave all of it back, traded back down to 122 by the end of the day. But you're right, like equities aren't crashing. Like the S&Ps didn't put in 100 points yesterday and then give back 100 points by right now. And so it's interesting to see that diversified action asset class wide. In these currency markets, Pete, I couldn't agree with you more that this is the most extreme situation that I can see in any asset class because, I mean, to take out that entire rally and right now, as we speak, print through the lows for the last 24 to 48 hours of trading through 122. We'll see if they can hold on to 122 for the next 48 hours, the last two trading days of the week here. I think that will be very important because, I mean, you widen out this lens a little bit. I know this is going to look like a lot of data, but just look at this. Every sell-off.
I love this feature that you can really, within a shortened time for an intraday frame, like 15 minutes, you can get a lot of data on here, which is great.
Yeah, so much data. I mean, not even, you go back 20, 30 years in some of these markets, you get all the data you want. But look at just the last handful of days here. Every sell-off, the bounce is sold into, and every bid, every up day, is sold into immediately. Right. And so, I mean, you talk about how markets are theoretically 50-50 in the long run. They can trend in certain directions. But even the last couple of days here, you want to say like there are about half up days and about half down days, but the up days really are pretty much unchanged and the down days are down, 50 to 100 points in this market. And so, even the up days, Pete, feel like down days. And the down days, again, here today, I mean, we're going to go into the U.S. session. It looks like down 40 points. In sterling, the down days are down and the up days are sideways. It's a really rough view of these markets. I'll widen out to the daily here, and you can see with this lower than expected inflation. Maybe we can price in another rate cut for the U.S. The pound, not seeing anything off of that. We go to the commodity currencies. You wanted to look at a Kiwi.
Just get no
rough
love whatsoever.
56 offer and not looking like it wants to bounce at all here.
No, and when we had all these currencies rally yesterday after the 7:30 number, this was the first one that they gave it all back in.
Yeah.
So weakest of the lot, absolutely. It continues to be. I'm looking for a reason because I think I shared the story. I've traded Kiwi when it was down to 48 cents and then the central bank intervened. But not to say that that's the level we're going to get to or that's the level we'll do something at. They've got another rate cut planned for the first quarter of this year. So, and traditionally, Kiwi rates, Aussie rates, Canada rates, and again, I say this with the caveat, that was then, this is now, but traditionally, I've been trading FX for 40 years, interest rates at those countries are always a little bit higher than U.S. rates, and it was considered a risk premium, whatever you want to call it.
Yeah.
Now we're seeing Aussie rates, Kiwi rates, and Canada rates all below the U.S. So should that lead to a lower currency? Absolutely. Are we lower? Absolutely. But it's what do we base from? We can base from 52 cents. I don't know. But there is nothing. They are slowly taking away from my perspective. Again, when I get to the point where all I can say is tape action is poor, weak rallies are sold into, the only reason you want to be long is because it's cheap.
Yeah.
Now, if you haven't traded and you don't have bad cost basis, maybe that's enough, as long as you put structure around the trade of that you're going to get out at a low level that, again, if you think this is cheap, where you're getting out is going to be lower, and you're comfortable with that, that's fine.
Sure.
But looking to pin the low is often a difficult exercise. I'd rather see, I don't mind missing the first 100 pips of a market turning.
Sure.
If it really is turning. I can't see any reason to kind of put that here.
Well,
now.
that's interesting thing that you bring up. In this environment, because these environments, what's the saying? You don't step into the same stream twice or whatever. None of these environments are ever the same. Right. No matter how many armchair economists or theoreticians or people on different networks want to apply. Well, when this happens, this happens, and this happens. So what in this market would cause a currency like the New Zealand dollar, like the Australian dollar, or even some of those European majors like the euro, like the pound, like the Swiss franc, at this point to gain some value? Now, what's nice is that story in these commodity currencies, like New Zealand, like Australia, like Canada, is actually pretty straightforward. They are cutting their rates like mad.
Right.
And so if you're sitting here day after day, week after week, and thinking that, okay, the economic data in these different places has to point towards less rate cuts or higher rates, that's not likely what's going to lift these currencies in this environment. Now, the play would be, if you are looking to buy these currencies, the idea would be these economies have to grow.
Right.
You have to start seeing growth out of China, right, out of New Zealand GDP, out of Australian GDP. There has to be reasons for those economies to start to grow past the U.S. growth rate. Because right now, I mean, the reason that we're at these historic lows in a number of these currencies is because you're in an environment where the two main movers of your currency, which is your economic activity and your interest rate, are both underperforming the U.S. And so if you're going to cut your interest rate down to zero in Canada, in New Zealand, in Australia, you better start seeing some growth from that GDP. Now, Canada, they stopped the unemployment rate from rising. We'll see what happens with the next month's unemployment data in Canada, but that's at least a little bit of a good sign. You've seen in flashes some of these Chinese economic numbers point a little bit higher, at least looking like they've bottomed at some point in the last 6 months or so. And China's trying like hell to lift their economic activity. Right. And that, of course, would lift New Zealand and lift Australia as well. And so if you are buying these currencies, the play really is these economies have to pick up, or I want some risk on exposure like an equity market would be. And I don't want to necessarily be buying SPOOs or NASDAQ or crypto or whatever risk on asset near the highs. Now, this is, I have to say, with all that being said, this is discounted for a reason. Like I say, your interest rate is underperforming the U.S. and your GDP growth is underperforming the U.S., but that would be the scenario for upside finally in these currencies, right?
I couldn't agree more. And, you speak about commodity currencies. It's interesting. What's been different this first 2 weeks in January is usually ping pong. We go back and forth in really fevered ways. Silver market started the year. Silver at the end of the year got sold down from $33 to $30. Immediately rallied to $32, went all the way back below $30, and now we're back up to $32 again. Gold ping pong. Copper was down to $4. We're up to $4.47. So those commodities, and the copper play is a little bit of definitely tied to a little bit of the rounding, bottoming in China. What's disconnected? These pieces. Yeah. We never had the ping pong bounce here.
They tried it,
but
so weak.
Copper moving from silver from 30 to 32 cents.
Huge bounce.
That's a big move. That's a 20% move in silver. Copper from $4 to $4.40. That's a big move in copper. So.
Crude oil as well. Yeah, I was just going to say.
Right, $80.
Not near its. I mean, for the Canada, New Zealand, and Aussie market, you would think crude was 60 offer.
Right.
And it's holding in the $70 to $75 range, which is at least mid-range.
Right. And if you want to build that into, well, these are commodity currencies. Commodities are doing pretty well. They're marked down. That's something you can look at. We know the correlation is positive, but not robust.
Pretty weak right now, yeah.
It used to be more. And again, correlation tends to be the weakest when prices are at the extreme. Yeah. So you can't count on a really robust correlation and a market divergence. You don't get that. Yeah. The correlations break down. You accept that. You look at correlations revert. Well, if correlations revert, that's interesting. So that's something you can lean your hat on a little bit if you want to play the contrarian here. But that in combination with a little bit, again, let's get to a point where we can challenge some of these very close highs, 56.80, 56.70, and spend a day or two above them. I'd feel a little bit better about that side of the market. Granted, and I'm sure everybody looks at this, it's very hard to sell new lows here.
It is, but they've given you, I mean, like yesterday, they gave you a 100-point bounce in pound. They gave you a bounce across the board if you wanted to. And
there were a whole slew of guys more than willing to take a look at that. What do we have today? Anything? I don't think we do.
We had, and again, this is kind of my point here. You had UK GDP come out softer than expected. Yeah. And so, again, if you're, we're talking about the commodity currencies, but even if you're the pound or you're the euro, Pete, you now have more rate cuts expected from your central bank and slowing economic activity. You have retail sales today in 35 minutes.
That'll definitely give you a binary event move. I don't know which way, but that'll give you.
Just really quick, I want to see in those commodity currencies if there's some big ticket items.
Frank's driving through the tastyfx calendar, which is fantastic. We spent a lot of time and effort redoing this, and it is the best calendar you'll find on the street.
It's really nice. You have some Canadian inflation. This is looking out to next week. I just wanted to look for these commodity currencies if there's anything big coming up. You've got some good Canadian data to trade off of next week. And then these central bank meetings have to hit. Yeah, that'll be the last week of January. So plenty of stuff to look at for these commodity currencies coming up. But yeah, I mean, you're going to have to see some confidence in those economies. Maybe you're looking at their equity markets, equities in China, monitoring that. For any semblance of a bounce. But yeah, a rough start here to Thursday. Red across the board, some more U.S. dollar bullishness after the attempt to take it down yesterday. But I think that's our time for today.
All right, let's wrap it up, my friend. Have a great day.